The US has officially reduced tariffs on Japan from 25% down to 15%. This situation arises largely from Japan's crucial choice to expand its markets for both rice and automobiles, effectively creating a prime example for our country to examine and glean insightful lessons from. Let's connect with Washington to analyze our strategy regarding the Japan deal. Kang Young-gu, our correspondent, share the results of the Japan-US negotiations.
The US has agreed to lower mutual tariffs on Japanese imports to 15%. In return, Japan has agreed to open its markets for rice, automobiles, and trucks as part of the trade negotiations. First, Japan benefited from the reduced tariff rates through this trade agreement. The reciprocal tariff rate dropped from the previous 25% to 15%. In particular, tariffs on automobiles and auto parts were cut to about half of the original 25%. Above all, the negotiation is seen as an effort by Japan to maintain its dominance in the US auto market. The US also benefited. In return for the trade deal, Japan has actively promised substantial investments totaling $550 billion, which is approximately 760 trillion Korean won. Furthermore, Japan has revealed its strategic participation in the crucial Alaska LNG development project. Let's hear what President Trump had to say about this.
So I think it's good. This was really the one they had to make, and we're going to make a deal with Japan on the LNG in Alaska, right? Okay.
Then, will South Korea also receive the same 15% tariff rate as Japan? How is this situation being viewed and discussed in the US?
There is a growing sentiment that the 15% tariff rate Japan secured in this trade negotiation should effectively serve as the South Korean government's negotiation limit. In the US market, South Korea competes with Japan across most advanced industries, including automobiles, home appliances, batteries, semiconductors, defense, and shipbuilding. Accordingly, South Korean products need to receive tariff rates comparable to Japan's in order to maintain their price competitiveness. However, this target is far from easy to achieve. To secure the 15% tariff rate, Japan leveraged massive US investments and notably the opening of its rice market as bargaining chips. South Korea might evaluate alternatives such as increasing agricultural imports for energy use or engaging with the Alaska LNG project. The strategies South Korea has prepared will likely be formally presented during the upcoming Korea-US 2+2 meeting on the 25th, which will involve the Ministers of Economy and Trade. Reporting from Washington, this is Kang Young-gu.